Kevin OLeary, the world-famous investor and star of ABC's Shark Tank, was recently asked in an interview about sovereign wealth funds. Now, these funds, they are the funds of entire countries, and many times they have billions, if not hundreds of billions of dollars in them. And what he said was absolutely shocking. These funds, they want Bitcoin. 1 to 3%, and 99% of them only want Bitcoin. Here's Kevin's comments from this interview.
When I talk to sovereign wealth, I don't care if it's Norway or the UAE or Saudi, they want Bitcoin. They have not got to the analysis that we've just gone through. They want the proxy of Bitcoin, and they want that volatility. I think for financial services, I agree that the gas fees are a joke. That's the problem. This will help solve for it, but if that becomes the default platform for other digital assets, that will help. But in the immediate term, the demand is for 1 to 3% of a portfolio, a standard. These sovereign wealth portfolios look like this: no more than 20% in any one sector, no more than 5% in any one name. So you're never going to find, Boeing or Bank of America more than 5% in a $900 billion fund. All the indexers know that. It's a really standard format. When you ask them, if you could buy a digital asset, which one would it be and what allocation? It's about 50 basis points on the low end, up to 300 basis points on the high end. And 99% of the time they say Bitcoin. That's all they know.
Now, what's fascinating about this is that sovereign wealth funds have largely sat out from the crypto market. But if they start to come in, not only do they have hundreds of billions, if not trillions of dollars that they collectively can deploy into the market, but they also tend to be very long-term oriented. And so if we see these large asset allocators come into the market and begin to actually hold on to something like Bitcoin, that likely would be a very bullish sign and provide for a tailwind for the asset. Now, what is holding these exact investors back? Kevin OLeary went on to explain that regulatory clarity is a key missing piece. Here's Kevin explaining that piece of the conversation.
It's going to take a while for that demand to come. And I think it would be number two. And they certainly like USDC and they love Solana and Polygon. You go down the list based on market cap. I get it. But right now, if we had policy on Bitcoin, I swear to you, the price would be $60,000 in 2 weeks.
Now, of course, it's important to understand who these investors are and what's holding them back. But my general view is that the regulatory stuff will sort itself out. We're seeing lots of regulatory scrutiny due to various issues in the crypto market. But Bitcoin continues to be the one asset every regulator around the world agrees on. Bitcoin is not a security. Bitcoin is something that any institutional investor can put into their portfolio. And it appears that the sovereign wealth funds are warming up to that idea, and they likely are going to start allocating very large dollars to the asset. Now, of course, these things take time, and it doesn't mean that Bitcoin is just going to rip upwards in price immediately. But what it does mean is that if you're a long-term investor and there's a finite supply asset like Bitcoin, and there's increasing demand over time, if you look out 5, 10, 15, 20 years, that tends to be a trend that you're going to want to pay attention to. Hey you, did you like this video? Great, make sure you subscribe, like the video, and see you next time.